JJ the CPA here. Hope you're doing well. The IRS is asking for your help and you should give it to them. This is related to promoters that are cold calling and taking a contingency fee of the employee retention tax credit. What they want you to do is anonymously report it by either filing Form 3949A or Form 14242, both of which I'm giving you a link to in the body of this video. If you are looking at somebody that has cold called you, somebody has sent you an email that really is probably spam, it's not anybody that you know, and it's lured you to click on something to learn some information to then call them, that is a promoter. This is what the IRS wants to know. Who is promoting their company, their services in a manner to convince you that you qualify for the employee retention tax credit when otherwise your other tax professionals have told you you don't qualify. Those that are in essence going contrary to what you're being told otherwise are promoters. Those that are not certified public accountants, those that are not enrolled agents, those that are not tax professionals that have been doing tax returns outside of and before the employee retention tax credit rolled around. So with that being said, what the IRS just simply wants at a minimum would be, what's the company name? What would be the website? Do you have a phone number? What about an email address? What about their physical address? Any materials that you can send on they would like. You can either mail it or fax it. That information is in the links. I will, in essence, encourage you that if you've come across this, that you forward it on to the IRS, because these groups are, in essence, causing taxpayers, business owners, employers, to improperly get tax credits. But guess what? You know who's holding the bag when that happens? Not the promoter. In the sense of, if the tax credit, the check, is sent back to the business owner, the employer, that business owner and that employer owes that money back to the IRS. Now, the promoter may be held accountable for criminal investigation, which is now undergone in terms of us learning about all the different things that the government's been doing related to this. So with this being said, help the IRS help you, help the IRS help fellow small business owners and employers, because what I'm telling you is you're not going to get away with it. Now, should you be afraid of getting the employee retention tax credit? Well, no, if you're doing it properly. What I do want you to note is that many of the promoters, those that are cold calling you, sending you an email, even if somehow they seem to be endorsed by some organization you're associated with, many of these associations have been duped, if you will. But in essence, what a lot of them are coming to you with is that if your suppliers were affected, you qualify. That is really actually wrong unless you're in a very, very slim set of circumstances. The other thing they indicate to you is that, well, if you just have employees, you qualify. Well, that's wrong. Your gross receipts need to be down at least 50% in any quarter in 2020 compared to 19, or at least 20% in any quarter, the first three that is, in 21 compared to the same quarter in 2019, or there's a governmental shutdown by governmental order, not headquarters told you, not a suggestion, not necessarily just a mask mandate. It is a governmental order that indicated that your business must be shut down either fully or partially. Your suppliers being affected means that it actually had an effect to your business, and that supplier was under a governmental order shutting them down. Delays in your supplies don't qualify. An increase in your supplies doesn't qualify. It would need to be that, in essence, an example that the IRS gives is that you're an automotive shop and you, in essence, replace motors, and you don't get a motor from your supplier for months because that supplier is actually closed, and that supplier is closed due to governmental order, and you would need to see and have in your file that governmental order in that jurisdiction, you would need a letter and documentation from that supplier telling you, documenting that they were closed, and yes, the reason for your delay was due to that closure, due to governmental order. You're not going to get that. That really is not going to exist. Now, if you're a multi-million-dollar massive company that's getting supplies from a major supplier and you're working with them and you're spending millions of dollars buying supplies from that supplier and it caused you to nearly shut down, cripple you, bankrupt you, okay, but guess what? That's not small business owners. That's not a physician. That's not somebody that makes birdhouses. That's not somebody that's selling perfume or gifts or supplies. That's not a barber who couldn't get, maybe in a delay, some kind of product to put into the hair. I'm talking about major effect. That's where these promoters are coming in. But what I want to be clear on is this. You're getting cold called. That is a promoter in the IRS's eyes, and you need to report them. You get somebody that's sending you an email that's unsolicited in terms of luring you to hire them to do your employee retention tax credit is a promoter. Somebody that is putting together an ad that is indicating that if your advisor told you you don't qualify, well then call us because we will make sure to know whether or not you do or not. That's a promoter. Okay, why am I going on about the word promoter? Because this, at a minimum, is what the IRS is asking for. It doesn't mean that you actually talk to them, doesn't mean that you return the email. The IRS needs to know who are these promoters so that they can put it to a stop. Here's what you need to know, because as soon as you now think, well, I'm going to fill out a form or send some documentation to the IRS, which I already told you is anonymous, all of a sudden you may go, well, I don't know if they're doing anything wrong. Guess what? Because if they're not doing anything wrong, then the IRS has no case against them. But there's nothing wrong with keeping promoters honest. And so if the IRS has an inquiry and they're doing everything correctly, well, then you got no worries. So I'm not necessarily talking about your advisor that you've been working with or a local advisor. And the IRS is saying, you know, if it's a CPA, if it's an EA, they do other tax services. In essence, that's really probably somebody that might be trying to help you. But if they start convincing you, they start doing things that make it sound too good to be true. In essence, you can't just take their word for it because the IRS is not going to take their word for it. The IRS holds you responsible. The IRS is going to, in essence, require that you be the one that document how you were affected, the governmental orders, and if it doesn't meet the qualifications, then you as the owner, your client, your employer, in essence, will have to pay back that tax, and possibly that promoter will be long gone. Don't pay a contingency fee. It's illegal. If you've paid a contingency fee, you might consider reporting them. It's illegal. If you are now looking at hiring somebody that's charging a contingency fee, stop. Hire somebody else. Contingency fees are illegal. I've given you links to all of this. I'm giving you links to other videos. Here's the deal. IRS needs your help. Give it to them. This is a massive issue spreading across America. And in essence, this is predatory. Promoters, shame on you. You're not helping anybody. Shame on you. You're not helping anybody. Shame on you. All right. Hey, thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me.